Hi, welcome to Born to Trade. Today I'll be teaching you how to read market structure the right way. This is the first video of series of videos where I'll be teaching you how to trade using the smart money strategy. This teaching stroke mentorship program will be going on for a few weeks, so I'll be excited to have you all through this program. Market structure is the behavior, condition, or current flow of the market. Basically, market structure tells you if the market is trending or not. It tells you the condition of the market. So, what is the benefits of understanding market structure? What are you going to benefit after the end of today's lecture? Market structure is going to help you predict the next direction of the market. When you understand how to read market structure the right way, it's going to help you predict the direction of the market. Market structure is going to help you know when to trade and when to avoid the market. Yes, it helps you know the right condition of the market to trade and when to avoid the market. Market structure is going to help you know your profit targets, and it's going to help you know where to place your stop loss. Market structure is going to help you trade with confidence. It's going to boost your confidence. It's going to help you hold your trades longer. So there are many more. I'm not going to list all here. You're going to discover others by yourself. When you understand market structure, when you practice them, you're going to discover others by yourself and know a lot more. We have a bullish market structure. A bullish market structure simply means, this one right here, it simply means that we are in an uptrend. And here we have a bearish market structure. A bearish market structure means that we are in a downtrend. And here we have a range market structure. A range market structure tells us that the market is in a sideways movement. The market is just ranging. It doesn't have any clear direction. So in a bullish market structure, the market is basically making series of higher highs and higher lows, higher highs and higher lows. You can see it very clearly. So what do we have here? The market push ups, creating a high. After it creates a high, it pulls back or retraces back. After it retraces back, it forms a higher low. After it forms a higher low, it moves up, breaking the previous high. Once it breaks the previous high, this confirms that the market is in an uptrend. And once it breaks this previous high, what do we expect? We expect a higher low to be formed. I hope you can see what the market is doing. It moves up, drops down, break previous structure, moves up again, forming a higher high, drops lower, forming a higher low. You can see moves up, break structure, moves down, a higher low, moves up, breaking previous structure. Once you see market doing something like this, I want to ask you, what are you going to look for? Are you going to look to short the market? Well, there are people who specialize on counter trading, but for me, I don't do that. I like to trade with the trend. Like they say, the trend is your friend till it ends. Yeah, the trend will always be your friend until the trend ends. Let's explain what we have here. As you can see, the market formed a high, it retraces back, and it broke structure, forming another high. It broke this structure and it formed another high. When you see markets doing things like this, you see markets breaking structure and forming another high, you should have an expectation that the market is likely to form a higher low. And when the market formed a higher low, it broke another structure here, forming another higher high. Someone is going to ask me, what is this that happened here? This is just a substructure. You can call it a minor structure. So what is a substructure? A substructure is a trend. A substructure is a trend inside the overall trend. As you can see, this was our higher low and this was our higher high. So this is another trend that is forming inside the overall trend. So this trend is valid and it doesn't affect our overall trend, which is the bullish trend we are in. When this structure is gonna change how we see the market is when it breaks this our higher low. When it breaks this our higher low, that's when we see a change of character and we can start expecting markets to start dropping lower. But since there is nothing like that, this is the overall trend. We got the substructure, and after the substructure, what do we get? We get a break of structure. which tells us that the market will continue to move higher. When we got this break of structure and a higher high, like I always say, you will start expecting a pullback. Once you start getting the pullback, you will always expect the market not to violate your higher low, because once the market violates your higher low, that means you start expecting a change of trend. So this is our higher low and this is our higher high, because markets broke this structure. This was our higher low, our higher high. What do we expect? We expect a pullback, but most times we don't get a straight pullback. We might start getting something like this, substructures. Even in the substructures, you can see the market has another trend inside this overall trend. You can see it very clearly, but after the playing and every other thing, we see that break of structure. And when we get this break of structure, it tells us that we are still in a strong uptrend. What do we expect? A pullback, and it continues that way, breaking multiple structures. So this is all for a bullish market structure. I know some of you doesn't understand what I'm still explaining, but don't panic yet. When we move into a price chart, I hope you understand what I'm saying more. So this is a bearish market structure here. So in a bearish market structure, what is the mark? This is just the opposite, or will I say it's just a flip of the bullish market structure. So a bearish market structure is just the market making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower lows, and lower highs. It continues that way, breaking multiple structures. What you need to note is that once the market breaks structure, that tells you that the market is going to continue in its direction. Like as we can see here, the market forms a low, forms a lower high, it breaks structure. What do you expect? A pullback, and it continues that way. But I'm not going to spend time here. Let's just explain this particular one, because this is what we're going to see in a price chart. The market forms a lower low, pulls back, it breaks structure, forming a lower low. Here is the pullback. Here you got a pullback. It didn't break this lower high here. What do we expect? The market to break this. Once the market breaks this, this is now our lower high, and we expect another pullback. When we get the pullback, we still expect the pullback not to violate this low, and this is just our minor structure, a minor trend inside this our overall trend, because we got a break of structure here. So this is our overall trend. When we get this pullback, we expect market to break this structure. Once market breaks this structure, this is our lower low, and this is our lower high here, and we're gonna expect the market to pull back. Once it pulls back, breaks structure, it continues that way. I hope what I'm saying is getting clearer. So let's go to a range market structure. Range market structure is not going to be too important in mapping out market structure when we look for a trade setup. Where a range market structure will be very important is when we talk about liquidity. But when you're analyzing and you see a market in a range, I would like you to avoid it for that period. Just look for another pair to trade, because you're not gonna like to be in a trade where the market doesn't give you a clear movement. You're not gonna like that. So a range market structure is basically a market that is making series of equal highs and equal lows. You can see the market is just making equal highs and equal lows. It doesn't have any clear direction. This market doesn't have any clear direction. So whenever you're trading, avoid this kind of market. It's just making equal highs, equal lows, no clear direction. Like I said, this is going to be important when we talk about liquidity, but for now we're talking about market structure. So when you map out your market structure and you see equal highs and equal lows, avoid the market for that time, except you have a supply zone and market forms this kind of range, which is liquidity. When it taps into your supply zone, you look for a good trade, or you have a demand zone here and the market is in a range. That is when the market taps into your demand zone. Just avoid this type of market. Let's move into a price chart. Let me show you a live example. Alright, this is NZD USD price charts. I'll be using it as an example to explain what I've been teaching you so far, so you get a clearer understanding. What do we see here? The market moves up, drops down, so our higher high and our higher low. After we got the higher low, market moves up, breaking the previous structure. We got a break of structure here. So when we get a break of structure, what have I always been saying? That you expect a pullback. So this is our new higher high. Remember, this is our higher low, and we say that price shouldn't close below our higher low. So this is our higher high. Price pulled back. It came very close to our higher low, but we didn't get any break below this low. So when we got the pullback that didn't violate this low, what do we see? The market rallies up again, breaking this structure. So when market broke the structure, here is now our new higher low. Price broke this high, making here our new higher low, and we don't want to see price close below this low, because once price moves and close below that low, it's changing how we are seeing the market, and we'll be expecting a change of trend, because that will give us a change of character if price comes and close below here. So we got this break of structure here. Market ranged a little. You can see there is a little range here. It continues to move higher. When price moved higher, we got another pullback. Remember, here was your higher low and price didn't violate it. When we got this pullback, we got a minor structure here, a minor structure that finally broke this structure. When we got this break of structure, what do you expect? You expect price to continue moving higher. So let me shift it here. So here is the minor pullback I was talking about. Minor structures that broke this structure, that broke this high here. So when price broke the high, we got a new high, making here our higher low. Someone might ask me, why didn't I choose this low here as our higher low? This wasn't the low that caused the move. This was the low that initiated this move. This low initiated the move that broke this structure we are seeing here. After we got this high that broke this structure, normally we expect a pullback, and here is the minor pullback. Market moved lower, but it didn't violate this our low. After that, market tried to push up to break this structure, but it couldn't at first try. You can see it just spiked above the high, but it didn't break it. After it spiked the highs, we got a pullback, then it break the structure. What I want you to note is that this spike wasn't a break of structure. See where we got the break of structure here, when the price moved and closed above this high here. I hope you're getting what I'm saying. Okay, so let's continue moving forward. What do we get here? After markets broke this high here, forming a higher high, here is now our new low, and we don't want to see price coming down to violate that low. So when we got this break of structure, we started getting a range. Market started ranging. After it's ranged a little, it drops, moves up, tries to break the structure, but it spiked again. You can see it. This was a spike. I call it a liquidity grab because it moved to grab the liquidity. Price moved lower, and here is where we finally got the break of structure. Here wasn't the break of structure. Here's the break of this previous high that was formed from this move that came from here. You can see it. Just keep your eye on this. Let me keep explaining. So what can you see here? After the range, it pulled back, tried to break, but it didn't succeed. Pulls back again and breaks this structure, breaking the previous high. So here is now our new low. I hope this is clear. Here is our new low, and we don't want to see price closing below this low. Like I said, if price close below the low, we get a change of character, and when we get a change of character, that is, we are switching bearish. So this is our new high, and this is our new low. So what do we expect? We expect a pullback, so price will continue and break this high, but unfortunately we didn't get any move that broke this high and continue. What do we see? We see price moving lower, breaking our higher low. When it broke our higher low, what do we get? We get a change of character. Let me type this out. We got a change of character here. Can you see it? We got a change of character because price broke here and moves down. What do we expect? We expect a pullback. After the pullback, what do we see? We see price moves down, breaking structure. You see we have switched bearish. It pulls back again. You can see it has already broken structure. We start expecting price to pull back and continues moving bearish. I hope this is a good example, and I know you understand everything we have said so far. I would like you to practice on your own. You can move to a price chart, try to see things on your own. I would have loved to use a replay button to explain this, but this video has taking a long time, more than I expected. This is what we've covered so far. You can see it. Price moves up, forms a low, breaking structure, form a higher high, form a lower high, break structure here, form another high, comes down, forms a higher low. We got a break of structure here, pulls back here, tries to break but it couldn't. But here we got the break of structure. It formed a higher high here. Market pulls back. Here is our new high. When it broke the structure, here is our new high. Here we got a pullback. So we got a pullback. This is a change of character. That is, we are switching bearish. It formed a lower low and continues that way. This is exactly what I've been trying to explain, and I hope this is a little bit clearer now. So move to the price charts. Try to see these things on your own. This is very clear. This is basically what the market has been doing. You can see market has switched bearish. Move to a price chart. Practice these things on your own. I'll be uploading the next video by this time next week, and our next topic will be supply and demand. I know you wouldn't like to miss that topic. So try practicing these things on your own. You have a full week to practice on your own, to do it on your own, to learn on your own. I know you won't be perfect at the first try. You continue trying till you can do it better on your own. Expect our next topic. I would like you to consider subscribing to this channel, because I know you won't like to miss any piece of this mentorship program. Thanks for being with me. I'm really excited you joined this program and you're watching this video. I'm Solomon Wisdom, aka Born to Trade. Thanks, till we see next time. Please consider subscribing to the channel, like the video. You can equally comment, tell me your view, tell me what you feel about the video. Till we see next time. Thank you.